Hi, 12th of July, 2023, Wednesday, MEO with Kel once again. Now, CPI data tonight, what's your number? My number is 3.1, okay? I'm following the market because I feel that if everybody's looking at 3 to 3.3, I think 3.1 makes a lot of sense. And the thing is this, because of that, right, the market is selling the US dollar now. Do you think it's time to buy? Well, to me, it's all yes. All right, so about 100.90 level, we can consider watching the market. I'll tell you more in detail very shortly. Let's go. All right, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. So let's discuss what happened last night. Okay, so first of all, the Dow Jones up by 317 points. So basically now the bear feeling is no longer there again because everyone is buying ahead of the CPI data. Now, usually before CPI data, the market usually will sell. But this time now, everyone is buying. Now, the rationale is simple because everyone believed that the CPI data from 9.1 has rolled down all the way to 5. In the last 2 months, okay, from 5 dropped to 4. And today, the market is looking at 3.1, 3.0. Wow, incredible, 2% in just 2 months, all right? Things is really following what the Federal Reserve is doing right now. So Amazon up by 1.3%, NVIDIA 0.53%, Google up by 0.59%, and Meta continue to rally 1.42%. Wow, because of threats. Okay, so let's look at what happened. Now we can see that the Dow Jones, the moment it started trading, after it gap up, it pulled down a little bit and all the way it stretched. And that's where yesterday we mentioned that if the Dow can break 34,000, it will break to 34.2, and it's really happened. All right, the June Consumer Price Index, which will be released later on in about 8:30 p.m., it's going to shed some light about the inflation situation right now. So of course, if you're going to become 3.1, the market will be happy because the market won this number. If the number is ending above 3.3, the market may take a little bit of jitter and a bit of pullback. Yeah. So the thing is right now, the market also understand that there's going to be a quarter basis point during the July FOMC. But the thing is this, people is expecting that it's going to be 3.1. Some are speculating that maybe they'll just totally pause this. Well, if the Federal Reserve really pause it, well, there are going to be two signs here. One is that, okay, maybe inflation is coming down. Two, are we in trouble? So that is the one that we are looking at. But nonetheless, right now, the earnings season has started. All right, so we're going to have the first draw later on this Thursday, where Delta will come out before the market open. And of course, the one that we're looking at is JP Morgan, Citibank, Wells Fargo, BlackRock, all coming this Friday. And personally, I believe that the earnings shouldn't be any better than the last one because the numbers we are seeing right now, right, a lot of layoffs still continuing. Hence, therefore, I think the earnings will be affected. Now, one thing you can look over here is the Germany core CPI data. Now, for Germany side, you can see very clearly that the CPI data have been climbing since 2022 to 3.1%. And of course, all the way, you've been moving up all the way to 5.8 and so forth. All right, until now, there's one point in April, it hit 5.8. Okay, then it pulled back to 5.4 in May. But incredible, they went back up again in June at 5.8. Now, the thing is this, based on what we know, they could continue to go to 6. Now, this is very different from what we're seeing now with the US side. US side, the inflation numbers have been coming down ever since. So something is wrong. I mean, couldn't be one country itself is not able to combat inflation and the other one can do that. So with the Germany reported the CPI 6.4 and likely continue to 5.8, there will be more rate hike coming for ECB. And that's why Christine Lagarde says that there will be more rate hike. But interestingly, US is not feeling the same way. So for tonight, the CPI data market is looking at 3.1. This is something incredible because we have 4 last month. So if a 3.1, that will means that we are very near to the 2% that the Federal Reserve is looking at. So if you look at the numbers right now, you can see pretty clear. At 9.1, we have strolled down all the way until the 4, and today potential the 3 handle. So all seems good. All right, that's the reason why the market is buying into the stock market now, because everybody thinks that inflation will be out of the window very soon. So that means that Federal Reserve can continue to do their can reduce their rate hike, and then after maybe cut some rates. So because of all these reasons now, CPI data tonight will be very important. And of course, JP Morgan come out with their own numbers. Yeah, let me just show it to you now. JP Morgan feels that right today, majority chance will be trading between 3 to 2.7 because that basically takes 70% of their view. Okay, 3 to 3.2 is most likely will happen according to them, 45%, and that will basically push S&P up by 0.5% to 0.75%. So if the numbers come out anything higher than 3.3, whoa, that may bring the market down a little bit, yeah? Now, I don't think 3.7, but I just kind of believe that I think 3.3 makes some sense, right? Don't you think so? But then my view is 3.1 for today. I'm going to stick with my ground. But some people are looking at 2.7. I don't think that will happen. If you have 2.7, the stock market will blast up. And it is very possible if you actually look at the charts. All right, I'll tell you more in details very shortly. So guys, what's your view? Let me know in the comment box what's your view on the numbers for tonight, yeah? Okay, so of course, because of that, right, we saw this morning Nikkei start to sell off because the yen escalated higher as the dollar slumps further. So why the dollar slump is because if the inflation figures come out like say 3, that means that the Federal Reserve can consider not hiking rate, and therefore the dollar took some profit. Now, of course, this alignment is not wrong, but the question is this: do you think so? The Federal Reserve have been saying that they will hike interest rate, and based on what we're looking right now, there's at least another 2 more times. If let's say the so-called the last few interest rate has hiked, has caused the inflation come down, right, then definitely we may see the same thing happening. So you can see right now the dollar has sank to the 2-month low against the majors, and of course, people are all waiting for tonight's numbers. So for me, when I look at the dollar, I find a similar pattern. Let's take a look, yeah? Now you can see that the dollar, the high was back here at 114 area back then, and it came down all the way. Now, whenever it comes to 102.187 of Fibonacci, you can see that there is always the base out support, but every time it will break below it and test the 100.90 area. Now, the 61.8 is something that I really want. If the dollar can come down to 99.21, which is 61.8, that will be the best time to buy some dollar. But at the moment now, if you look at it, right, there's a triple bottom, potentially triple bottom at 109.0. So I think that traders can consider to put some buy limit order there to let it be touched, because I believe that today we are touch and go. Yes, I believe that today will be a touch and go, meaning, yeah, the market will get what they want initially. Then after that, the dollar will rebound. Then the dollar will rebound. So that's my personal take. So for those who are going to do some trading on the commodities like gold and silver, my personal advice is this, guys, take some profit along the way. Yeah, because you don't want the market to do this, sell on news and sell on rumors and buy on news later on. Yeah, so watch out for the dollar later on. Now, Tom Lee is definitely very bullish. In fact, he says that after this inflation data, the S&P could surge by 100 points. Wow, Tom Lee. All right, I've been following him since 2020, and of course, he has been pretty incredible in 2021. But in 2022, he was absolutely wrong. But now 2023, he's returning back because he's a bullish by nature, right? So is it possible? Well, if let's say the numbers come out really 3.1 and the market thinks that the inflation is no longer a problem, yes, there'll be more funds coming in, and that may propel the S&P higher. But again, if you look at the VIX, you can see that every time before the CPI data, the VIX will surge a little bit, and then after that, it will ease off majority of the time. So if VIX do ease off, that means that the market is going to go up, right? So is it possible? Well, the pattern does show that before the CPI data. Now, one thing for sure is that the reason why the S&P, the US market have been so strong, there's always a good reason for everything. And the reason is because of the BTFP. All right, now, of course, you may not have heard it. I'll share this with you. Now, BTFP basically is a bank term funding program. Okay, so let's take a look here. So you can see that the S&P 500, all right, S&P 500 and this BTFP has been moving in tandem since March, right? Now, why March? Remember, that was the start of the SVB. When SVB collapsed itself, right? The Federal Reserve probably came in and saved the day. But of course, they used another alternate way through the bank term funding program. And you can see that after that, the S&P and the index, right, really move together, really together. And of course, you can see right now the amount of money poured into the system is incredible, right? $103 billion already been pumped in to distressed assets, right? So all these speak for itself, tell you why the market has this reason for going up. Now, the thing is, with the probability of more interest rate hiking, the 1-year yield has now hit incredible 5.48 level. Now, do remember this, just less than 2 years ago, around 2 years ago, the 1-year yield was trading near flat. Okay, flat means lesser than 0.5%. Suddenly, because of that, wow, look at it. Look at the 1-year yield. It shot up all the way. In short, up by almost 5 full times. So the question is this, all right, would this be a problem? Well, of course you have to, because someone must pay for the bill. So that's why Steve Henrich came in and rubbed it in. Wow, the higher they raise a rate, the more employed people get. It's a miracle. We should have done this years ago. All right, so you can see that the employment data and the yield is actually going up together. That's something incredible. So we all know in fundamental, whenever you increase interest rate itself, right, increase cost of the company, why would they want to employ more? Because why? Because they feel that, because there's a lot of money on the side note, because when Federal Reserve, when they hike rate, they also give a lot of money before that. So a lot of this company benefited from that. So that is why now, right, it doesn't make sense, fundamentally here. Now, one note is that the NASDAQ 100 index special rebalance. Okay, so just let you know, right, they'll go through a special rebalance effective on the market open on Monday, July 24th. Now, the moment I saw this date itself, I remember something I said yesterday, remember? Now, yesterday I told you, right, the S&P 500 may have a KFC, a flip cycle on the 25th of July. So which means that, right, based on what I'm seeing right now, there should be a big movement coming in from the 25th of July. And that coincides with the NASDAQ so-called rebalance. So that's why I kind of believe that we may actually see the market going up again, because the boys are really buying. And of course, with the rebalancing coming in, usually there will be some buying unless something really terrible happened, all right? So with that information, right, we can see right now for the Dow Jones, the boys are still selling based on my indicator, all right? And my KRW showed that the selling mode is there. The only thing, the momentum isn't there because the retails are still pretty happy with whatever they're seeing right now. So very simple, guys. I have my KFC level right here, and that is whereby I suspect that the market must take 33,991 very seriously, because this is the KFC level. Now, if the market stays above 33,991, no problem, all is good. That's why you can see the market going up. But if the market actually stays below 33,991, then some selling may be happening. Now, based on my personal experience, most likely the market brings down, it may come down all the way to 33,117 level. So traders, you need to be very careful these few days. Watch out for 34,213. That is a very important pivot 2 level. If the market stays above it, everything is good. If it stays below it, then selling is expected. Yeah. All right. So one thing is that the weight of the total top 10 stock in S&P, you can see the weightage itself has really overseeded the rest. So the thing is the earning itself, the top 10 is not even near to what happened back in 2021. So in short, the stock prices are going up in market cap, but the earnings ain't following through. So something is wrong. It's not just one company, not two companies. Apparently, the top 10 companies of S&P 500 is actually producing something like this. Is it because they know what to do by getting out, or because they know that something big may happen, they can get it cheap once again? So once ago, guys, let me know in the comment box what you think about this particular drawing. And for us, it's all very simple. If the market really goes up and fail to go higher without changing my KSI color, then the chance of it coming back down to here is very possible. So traders, watch out for this, all right? Watch out for today's CPI data. All right, that'll be all for today. Please like, subscribe, and share your friends. Kel signing off. Take care. Bye-bye.